The solution to Nigeria's looming demographic potential lies within, says President Muhammadu Buhari as he opens retreat for ministers designates. Your position on President Buhari's Forex pronouncement is simply incorrect. Senior Special Assistant to the President on the Media and Publicity, Garba Shehu, tells Financial Times. Plus, bearish holds persist in the Nigerian stock market as 15 firms get oil for crude swap deal. The program is Business Express, reaching you from Abuja, the nation's capital, on the network service of the Nigerian Television Authority. I am Amina Nujaim. Welcome. President Muhammadu Buhari has described as frightening the looming demographic potential of the country between now and 2050, saying the handouts from the so-called development partners can no longer help as solution to the nation's problem lies within. He is, however, optimistic that with the effective implementation of the next level agenda, his administration's 8th year will have laid the grounds for lifting 100 million Nigerians out of poverty, fundamentally shifting the country's trajectory and placing the nation among the world's greatest. The president was speaking at the opening of a 2-day presidential retreat for ministers designate preparatory to the inauguration of the Federal Executive Council.
By average estimates, our population is close to 200 million people today. By 2050, the United Nations estimates put Nigeria third globally, behind only India and China, with a projected population of 411 million people. This is a frightening prospect. Honorable Ministers designate, it is a great privilege for you to be called upon to serve in this great office of state, and you must grasp the chance with two hands and put in your best efforts, as Nigeria today needs top managers to handle our numerous challenges. There will be long hours, and you must be prepared to live laborious days if we are to serve our people optimally.
Financial Times article titled Muhammadu Buhari sparks dismay over policy shift on food imports, published August 15, suggests Nigerian government is restricting the import of agricultural products into the country is simply incorrect. Garba Shehu, Senior Special Assistant to the President on Media and Publicity, in a letter to the publisher of the Financial Times, stated that to be absolutely clear, there is no ban or restriction on the importation of food items whatsoever. He further added that President Buhari has consistently worked towards strengthening Nigeria's own industrial and agricultural base. Garba stated that should importers of these items wish to source their forex from non-government financial institutions and pay customs duty to those imports, increasing tax intake, something the Financial Times has berated Nigeria for not achieving on many occasions. They are freely able to do so. diversification of forex provision towards the private sector, and away from top-heavy government control, a diversification of Nigeria's industrial base, and an increase in tax receipts. The letter states they are all policies one might expect the Financial Times to support. Yet, for reasons not yet clear, the author and its newspaper seem to believe the president's administration seeks to control everything, and yet to do so via policies that relinquish government control. The Nigerian National Petroleum Corporation, NNPC, has announced 15 consortia company winners of its 2019-2020 direct sale of direct oil and direct purchase of petroleum products arrangement. A release in Abuja by the corporation Group General Manager, Group Public Affairs Division, Undu Ngamadu, says it is in line with the NNPC's resolve for transparency and accountability of its activities as committed to by its Group Managing Director, Malam Mele Kyari. Following the completion of the 2019-2020 DSDP tender exercise, reputable and experienced international companies and Nigerian downstream companies emerged successful to undertake the 2019-2020 DSDP arrangement. The contract is for 1 year, effective 1st October 2019 to 30th September 2020. Under the DSDP arrangement, the 15 consortia companies shall, over the contract period, offtake crude oil and in return deliver corresponding petroleum products of equivalent value to NNPC, subject to the terms of the agreement. The OPEC reference basket was 2.8% higher in July over the month of June. A breakdown of the monthly report by the organization shows that product market globally saw solid gains.
The OPEC reference basket averaged higher in July, up by $1.79, supported by a pickup in Asia crude demand. Crude oil futures prices also rose from their low levels registered a month earlier, as escalating geopolitical tension offset bearish sentiments in global oil demand. Hedge funds and other money managers slightly raised their bullish position on crude oil in July, with net long positions ending the month marginally higher compared to the low levels recorded in late June. The global GDP growth for 2019 is now forecast at 3.1%, a slight downward revision from the previous month's report, while growth remains forecast at 3.2% for 2020. In 2019, oil demand is anticipated to grow by 1.1 million barrels per day year-on-year, a downward revision of about 0.04 million barrels per day from the previous month's projection, mainly due to weaker than expected oil demand data from OECD Americas, other Asia, and the Middle East in the first half of 2019. The monthly oil market report states that total oil demand for the year is now anticipated to reach 99.92 million barrels per day for 2020. World oil demand is expected to grow by 1.14 million barrels per day, in line with last month's projection. Non-OPEC oil supply is anticipated to grow by 1.97 million barrels per day year-on-year in 2019, a downward revision from the previous month's projection, due to lower than expected oil production in the US, Brazil, Thailand, and Norway. Product markets globally saw solid gains from the previous months. Preliminary data for June showed that total OECD commercial oil stock rose by 31.8 million barrels month on month. Demand for OPEC crude in 2019 was revised up by 0.1 million barrels per day from the previous report to stand at 30.7 million barrels per day, 0.9 million barrels per day lower than the 2018 level.
Dr. Timothy Okon is a man of many professional hats in the oil and gas industry. He joins us to look at the issues around OPEC cuts agreement and the Nigerian economy. It is good to see you on Business Express.
Thank you very much.
Okay, the OPEC cut and recently the plus that Nigeria affirmed the commitment. Could you explain what this means to the country like Nigeria, considering the fact that the budget is being predicated on the benchmark?
Okay, I believe you are referring to the December 2018 agreement known as the Declaration of Cooperation Agreement.
Yes.
Which resulted in collaboration between OPEC and 10 non-OPEC members, right? In the first 6 months of that agreement, Nigeria was exempt, but in July 2nd meeting, that Nigeria got a quota of 1.685 million barrels of oil a day. The implication of that is quite simple, that we have to adhere to the quota itself, even though we produce more because the condensates are not subject to quota. Two things. Of course, revenues come from either you have volume or you have price. Mm-hmm. So defending a reasonable price for oil is important to Nigeria, exactly for the reasons you've mentioned, which is the benchmark pricing we use in budgets.
Yes.
However, when you look at pricing, there are many dynamics that you consider, political, economic, technology, etc. But I would also want to say that you have the supply side, okay, and then the demand side. The demand side depends on economic growth. And so there are indications that in 2020, for example, if the world economy is in recession, then you could potentially be in an oversupply, and something has to be done about supply of oil. But the program, if we adhere strictly to the quota and others do the same, then you may be able to defend a reasonable price for oil. Okay. The key thing also is that, of course, since we are dependent on it, then you have to manage your budget in a reasonable way, so that's not to overspend, etc.
Okay, how would you say the cuts agreement has affected the price of oil in the market?
Well, the cuts essentially to demand side aspect of the market vis-a-vis the supply side. Okay. If I cut supply, I may tighten supply, and then there might be a call on inventory, etc. But economic growth is at the heart of whether there is demand for oil or not, and there are issues that we need to consider. One, the sanctions on Iran and how that will play out, which is politics. Two, there is potential for slow economic growth. In fact, there's talk of recession, okay, in the world economy. All that will now become something that will be considered at
so
the December
what does that
meeting.
Translate to in the oil market?
In the oil market, it simply translates to volatility. That, I mean, you probably are familiar with what is happening between China and the U.S. Yeah. And the U.S. is actually the highest producer of oil, actually, today. There are top 3 countries, U.S., Russia, and Saudi Arabia. Okay. And the U.S. has successfully reduced the cost of production significantly in the last. So the U.S. is very, very competitive. And if the U.S. economy tanks and it's in recession, then you're looking at a significant drop in oil prices, because that's an economy that it's the world's largest economy anyway.
Okay, looking at the prevailing situations in Nigeria, paint a picture for us.
Well, our budgets are under strain already. Mm-hmm. To balance the Nigerian budget, we require oil prices in excess of $90 a barrel. Depends on what. But right now, the prices have been hovering between $50 and $60 dollars. Mm-hmm. So it means increased deficits, and increased deficits have an impact on the ability of you and I to borrow because, of course, government needs to fund its services. So generally, there is what I would call a crowding out effect. Basically, the state borrows and then businesses don't get to borrow because the state obviously can borrow at a risk-free rate because it can print money and pay for what it borrows. You and I can't. So it has implications for the deficit, the size of the deficit for the Nigerian government expenditure.
Okay, you earlier made mention of the trade wars between the giants, China and the United States. Is there an opportunity for Nigeria to creep in and take advantage of the situation?
Well, if you were a manufacturing nation or you exported agricultural products, because the trade war is being fought with tariff on certain goods and items. So China is going to put tariff on American agricultural exports, for example. The Farm Belt is hurting. Similarly, all the technological, the goods that are imported into the U.S. are now tariff, including your iPhones. And so the prospects of that are what is really driving some of the dynamics. But I think clearly it's difficult to run trade policy or even foreign policy on tweets and things like that. So it's, I would say, the impact of it is just as uncertain.
Foreign policy.
Yes, that's right. You wake up and you have a new tweet, and the market goes down because they're so it creates uncertainty, and it's difficult for me here to pontificate. But Nigeria's ability to take advantage is essentially weakened by we're not really, other than oil, we don't export much manufactured goods or agricultural products, etc. So you can't take Brazil, for example, is taking advantage of the tariff on American products because they export grains and things like that, but we don't. So.
Okay, still talking about opportunities that Nigeria can tap into. With a cap on output, how can Nigeria still tap into that? Is there a way we can gain something from it with the rates that apply right now?
Well, with a cap in production, it just means that you have to adjust certain projects. The projects that would yield a better rate of return, if you're looking at developing new projects, etc., you'll be more careful in doing that.
Okay.
But let me say that beyond the tweets, and there are certain fundamentals investors look at. If the economy maintains a reasonable buoyancy, that's the world economy, and maintains a reasonable buoyancy, then demand will go up, and it will absorb some of the supply, and prices would stabilize accordingly. And I'm fingers crossed. I'm hoping that the trade war between the two largest economies in the world is somehow settled, because that will bring some relief to those who are planning based on how the world economy is going to look like.
Okay, how then would you say the oil and gas sector would shape the country's economy in 2019?
Well, we're already past midpoint in 2019. And I think much of the changes that we expect to find, and I don't know what the new cabinet is going to look like, etc., but there will be a lag. But if we look at 2020, then what happens to whether the cabinet, the general fiscal posture of government will matter. If it wants to curb deficits, etc., and then, if it wants to do that, then of course oil prices will be a key to that. If not, of course, we'll have to cut expenditure, and potentially we are growing 2% a year. Potentially we could run into some headwinds, and a recession may be looming.
Well, topic for another day.
Right.
Dr. Timothy Okod, an oil and gas expert. It was a pleasure having you join us on the program today.
Thank you very much. All right.
Right. Now, moving on, stocks continue to bleed at the Nigerian Stock Exchange, rising to more than 1.6 trillion naira Moplang Dakok has an outlook of performance for the week ended Friday, the 16th of August, 2019.
It was a 3-day trading week on the Nigerian stock market last week in observance of the public holidays to mark the Eid al-Kabir. The NSE All-Share Index and market capitalization both depreciated by 1.40% to close the week at 26,925.29 basis points and 13.121 trillion naira. All other indices finished lower with the exception of the NSE Premium Index, which appreciated by 0.64%. A total of 726.6 million shares worth 10.4 billion naira in 12,915 deals exchanged hands. The financial services industry, led by volume, led the activity chart with 554.9 million shares. The conglomerates industry followed with 76.1 million shares, while the third place was the consumer goods industry with a turnover of 29.7 million shares. Guarantee Trust Bank, Zenith Bank and Transnational Corporation of Nigeria traded the highest number of shares of 303.1 million, worth 5.4 billion naira in 2,842 deals. 1,292 exchange-traded products valued at 15,283.55 naira were traded in the week in 7 deals, as well as 4,009 units of federal government bonds valued at 4.1 million naira. 15 equities appreciated in price during the week. 34 equities depreciated in price, while 119 equities remained unchanged.
Thank you, Moplang. Nigerian stock market opened the week after a bearish week. It opened in the green, with the All-Share Index gaining 0.71% to end the day's session at 27,115.89 points. Market capitalization 13.214 trillion naira, with volume of trade standing at 250 million, valued at 4.17 billion naira in 4,116 deals. WAPCO led the activity chart, followed by Transco and Zenith Bank. Global stocks show sign of pickup on global stimulus talk and trade optimism. Bosede Abel has a roundup of activities around the globe.
The global scene. U.S. stocks rebounded on Friday as retreats, bond rally and news of potential German economic stimulus brought buyers back to the equities markets, closing the book on a rough week. While all 3 major U.S. stock averages ended the session higher, they still logged their 3rd consecutive weekly losses, having been rattled since last Monday by growing U.S.-China trade opposition, simmering geopolitical tensions and signals from the bond market that sparked fears of impending recession. European shares rebounded from 6-month lows, with the pan-European stock 600 index over 1% higher. A technical glitch delayed the start of trading of the UK's benchmark FTSE 100 and mid-cap stock indices for almost 2 hours. It was the longest outage at one of the world's top stock markets in 8 years. In Asia, Japan's Nikkei recouped early losses to end 0.06% higher. In Shanghai, blue chips rose 0.3% after China's state planner said Beijing would roll out a program to boost disposable income, while in Africa, stocks were mostly mixed.
Thank you, Bosede. On that note, let's see how commodities are faring in the local and global markets. That brings us to the end of this edition of Business Express. You can access all previous episodes on YouTube, and you can also communicate with us on Twitter, and the handle is NTA News Now, #BizExpress.